Three of the most commonly used financial statements are income statement, balance sheet, and cash flow statement. In this video, I'm going to talk about the basics of income statement. Keep in mind though, we're not going to talk how income and expenses are recognized in income statement. This concept is covered in introductory accounting class. This video is more like how can we use information provided in income statement. Let's get started. So I want to start with a very simple question. What is income statement? And I think most of you already know because you have already taken introductory accounting class. And income statement is basically a statement of a firm's revenue and expenses over a period of time, right? And that period of time is usually a year, but it could also be a quarter. So what it does is it starts with revenue, right? And it lists all the expenses. And once it lists all expenses, so towards the end, it shows us the profit for that firm during that period of time. So this is basically the outline or a format of income statement. What I'm going to do is I'm going to show you in a more formal way the basic outlook of income statement. So remember, income statement always start with sales or revenue, which is the total money a firm generates by selling its goods and services, right? And then it lists the cost of goods sold. So cost of goods basically refers to all the costs associated with producing the cost of goods sold, right? So then after, if you subtract that cost of goods sold from sales revenue, you're gonna get gross profit, right? And there's other kind of cost also, that is operating expenses, which includes all kind of cost, including sales and marketing, research and development, general and administrative cost, and depreciation and amortization. And if you subtract your operating cost from your gross profit, it gives us the operating income. And this is very important line in income statement. So I also have given you the number. If the revenue is 100, cost of goods sold is 30, then gross profit would be 70, right? And if operating expense is 20, then your operating income, it would be that 70 minus 20 is 50. That gives us the operating income, which is the profit for that firm after subtracting all of its direct and operating expenses. But not that all of that income goes to the firm, right? Sometimes firm also have debt on their balance sheet, so they have to pay the interest, and that interest, if you subtract that interest expenses from your operating income, then you would get earning before taxes, right? And in this example, our operating income was 50 and $10 is the interest expense. So if you subtract that 10 from 50, you get 40. That's your earning before taxes. Keep in mind, we always have to pay the tax. Likewise, firm have to pay the tax too, right? And there's a tax expenses. So that's the income tax the firm has to pay on the income they make. And if you subtract that income tax from your earning before taxes, then you get the net income. And that net income is the profit for that firm during that period. See here how it lists all these items of income, which is the revenue and expenses in the income statement. You can obtain income statement from a company's website, SEC filing, free sources such as Yahoo Finance, or private data vendors such as Mergent Online. And in this video, I'm going to use this Mergent Online because Mergent Online provides a lot more information than income statement, and we are going to use it. To access income statement through Mergent Online, please go to library, and I'm here on my library, right? And then on this library you have the article and databases, and there's a business. If you click on business, you will see the data that we have, and one of them is Mergent Online. Click on this Mergent Online. Now it will take to this Mergent Online page, and now you can type any company that you are interested in, right? So for example, if I'm interested with Tesla, I can type here TSLA, Tesla, and it suggests you the name. Otherwise you can type the name as well and click on here. So it has all kind of information, but for now we're gonna focus only on the company financial statement. So click on company financial statement, and you will see different options to choose this company financials. Is reported, click on that is reported, and choose whether you want the annual date or quarterly. So I want annual. Then we want to look at income statement, right? So click on income statement, and you have time to choose whether you want 3 years, 5 years, 7 years. I want to choose 7 years, and once you make that selection, refresh it, and it gives you the last 7 years income statement, right? And there's a data on the top of this page here in Excel. You can click it and save on the desktop. Similarly, you can also click on standardize one, and I want to use standardize because it makes our comparison easier and easier to understand each items here. So click on the standardize while you are here, and the same time period, right? The income statement annual for 7 years, and now it has all the items from this income statement. And good thing about this standardized version is there's a what sign next to each item, and you can take your mouse to this what sign and learn what each of these items means. Please, please, please spend some time trying to understand each of these items. And now again, you have this file like data in your Excel. You can download it, and I have already downloaded. So in order to save some of our time, I have already downloaded and compiled it, and I'm going to use that data. So in this file, I have here is reported, right, in my first Excel sheet, and then I have a standardize, and I have now my own way of organizing information. And that's pretty standard. Most people do that because different people use information differently, so they try to restructure this information given in the income statement in their own way. Before you start using information given in the income statement, please make sure that some of the items are there. If they are not there, please make sure how to get them. For example, EBITDA, which is in red, and most of this red line here means I added them and I borrowed this information from different sources. So EBITDA, I added this line, right? So how did I get this? EBITDA is the earning before interest, tax, and depreciation. So you can get this amortization and depreciation most often if it is not already listed from cash flow statement, and if you subtract that amortization and depreciation from your total indirect cost, then you get the EBITDA. Similarly, interest expenses and interest income, if you click on as reported, and you will find the income, expenses, and interest income. So please make sure that all of these new items are included in your Excel file because we are going to use it. And for your convenience, I'm going to upload this in our course website, and you're going to look at and make sure that the company that you are looking at will have a similar income statement. So now my next thing is, how can you use information provided in income statement, right? And most often ratios and common size income statement are used for utilizing information given in the income statement. And there are basically two ways of analyzing this information given in the income statement. One is cross-sectional, and another one is trend analysis. In cross-sectional, what you do is you calculate the ratios that you are interested, right? A ratio 1, ratio 2, whatever ratio you are interested, you calculate all the ratios and you list the ratios of your company, right? Your company with the industry average, and the market, if you can get the data, market average. And you compare each of these ratios with the industry average. Sometimes it could be with the competitors and the market, and see where your company stands. So another tool most often people use is the trend analysis. In the trend analysis, what do? Is you calculate ratios or whatever item that you are interested and see what is happening over period. So here is year 1, year 2, always to year whatever interest number of year that you're looking at, and see how that is changing over time. Sometime it could be increasing, sometime it might be somewhere constant, and sometime it might be going down. So this is how you use the information given in the income statement. So these are the most commonly used ratios directly computed from income statement: operating profit margin, net profit margin, EBITDA margin, interest coverage ratios. So I'm not going to explain what this means. You can find anywhere you would like to. What I want to do is I want to show how you can use information given in the income statement. So first what I can do is I can create common size income statement, in which case you express each item in the income statement as a percent of total revenue, right? You divide each item of this income statement by the total revenue and express all item as a percent of total revenue. And once you have this common size income statement, and you can see what is happening over time period, and sometimes you can also compare your company with the market and industry. For example, I want to see what is happening net income as a percent of sales over period, right? So you can look at the numbers, and sometimes the graph might be a better way. So I can select these last 5 years of data, year 1 to year 5, right? And income, net income for the last 5 years. And once you have that, go to insert, and then after 2D graph, and you can click here and see what is happening. This is the net income as a percent of revenue over year, right? So you can see in the last 5 years the net income as a percent of total revenue is growing, which is a good sign. Similarly, if you're interested with any of these items, you can plot it, you can compare against the industry average or the market. Another tool most commonly used in utilizing information given in income statement is the ratio analysis, which you have covered in your introductory accounting class as well, right? So what you do is you compute any ratio that you are interested. For example, I have computed profitability ratios using information given in the income statement. The first one is gross profit margin, which is gross profit over sale. You can compute this ratio dividing this gross profit by sales for the last 3-4 years, right? Similarly, you can compute operating profit margin, which is operating profit over sales, right? And you can compute net profit margin, and any of the ratios that you are interested, you can compute it, and you can see what is happening over here. For example, I want to see here EBITDA margin, which is EBITDA over total revenue. I want to see what is happening to this ratio in the last 4 years, right? So you can select all these years and control, and you can select EBITDA margin right here, and then go to insert and see the 2D graph here, right? 2D graph. So that tells you what is happening this EBITDA margin over year 1, 2, 3, 4, 5 here on the x-axis and the value on the y-axis, and it gives you a visual picture. That's another way to look at. Similarly, if you want to compare more than one ratios, you can select this all. You can select this time here, right, and control which ratio are you interested. For example, I'm interested with this return on assets, but this ratio is going to use some information from balance sheet as well, and I want to plot this operating profit margin. You can select these two and insert and go here, and you can also plot these two ratios together, right? And if you have a data from your industry average of the market, you can also plot it and see what is happening over year and how your company is doing compared to the industry average and market. So this is a broad outline for using information given in the income statement. All right, thank you.